The slide in natural gas continues, or it did to the end of last week anyway. Let's see what happens this week. And I thought, let's take a step back and have a look at the sort of things that have driven natural gas historically, what's driving this slide now, and where the bottom might be. I'm David Jones. I thought it was time for another natural gas update, giving just the relentless fall we continue to see in this market. It's down, what is it now? Down about 75% from last summer highs, peaked up there around $10, currently trading at the time of recording around $2.50. So I thought, let's take perhaps a calm, collected look at the price of natural gas. So as usual in this video, I go through some of the things that have affected it historically, what's affecting it now, then we'll jump onto the charts, take a look at things in a bit more detail and see where perhaps where it might go next. What's the right thing to do? Still look to go short, considering how far this market is falling and how weak it still is, or could the bottom be near? Before we get into that, I did start a newsletter a couple of weeks ago. It comes out just once a week on a Saturday, free of charge. It's a catch up with what's happening in markets, all sorts of markets over the past week, what market I'm watching in the week ahead, a trading tip in there every week designed to hopefully make you a better trader, and also a look at some of the markets that I'm trading and the positions I have open. As I say, free of charge. To sign up, go to the website, jonesthemarkets.com. If you scroll down to the bottom of the page, there's a sign up box at the foot of the website. You can sign up there and you'll start receiving this newsletter every weekend from Saturday after you've signed up. I've also put a link to the most recent newsletter in the description of this video so you can get a feel for the sort of thing, the sort of content it has. Right, let's get started and take a look what actually is going on with natural gas, what's it used for, what drives it, all that sort of stuff. So let's start right from the top and assume no knowledge. So what's natural gas actually used for? Well, it's used to heat homes, heat workplaces, importantly, generate electricity. It's clearly an important energy in the whole global energy mix. If you look at some of the numbers, in 2021, 32% of US energy consumption was natural gas, and the same period for Europe, that number was around 34%. So for example, it's used in the winter to heat homes and heat offices, but also if we have hotter summers than expected and an increase in use of air conditioning, that increases demand for electricity, and many countries use natural gas to generate electric. So again, it has an impact in all sorts of different parts of our sort of day-to-day and working lives. Clearly, weather has an impact here. For example, let's say it's September and the forecast is for a colder than expected winter, then markets might start anticipating an increase in demand, and we might see the price of natural gas start to tick up in the market ahead of this forecast of a colder winter. But there are other ways that weather has an impact as well. If we go back to 2021, Hurricane Ida back then saw 90% of the natural gas plants in the Gulf of Mexico closed down as a precaution as the hurricane was approaching, to try and protect them from any damage. So what we had here was weather seeing the supply side of natural gas being throttled. So of course we have on the one side, if demand increases, the price is usually going to go up. But if we see supply being throttled, as we did have during Hurricane Ida, that has an impact on the price as well. So we looked at weather, we looked at how it's used. What else can affect it? Well, clearly geopolitical events have an impact on energy markets. I think we know that over the decades. If we see a war in an energy commodity producing country, that can cause volatility for the price. And of course, more recently, just within the last 12 months, we had the Russian invasion of Ukraine. On the day of the invasion, the price of European natural gas, a different market to the one we're going to look at, US natural gas, but on that day, the price of EU natural gas jumped about 40% on the day of the invasion because of the threat to supply. Clearly, if there's a war going on, the supply chain could be affected, but also because of the risk of other countries imposing sanctions on Russia, which again would throttle the supply of natural gas from that part of the world. So geopolitical events definitely play their part. And the bigger picture, let's also not forget about this one, particularly relevant at the moment, what's going on in the wider economy. So natural gas, like other energies, is susceptible to what's going on with interest rates. You know, exploring, producing, shipping natural gas, it's an expensive business. And you know, like any company in other related areas of business, if interest rates go up, then it can make it, well, it does make it much more expensive to invest in your own business, whether that's exploration or production or whatever. So higher interest rates can stymie investment in the expansion of natural gas production. So it's something that might not have an impact today, but perhaps further down the line, we will feel the effects of that. Let's talk about what's driving the price of natural gas now. The video I did a couple of weeks ago on natural gas, I talked about milder weather than expected for most of January in Europe and the USA. If we look at the USA, for example, I did a bit of research this morning, the average temperature in the USA over this winter period is the highest in 15 years. So we are seeing in the Northern Hemisphere milder winter. Milder winter, supply and demand, we're seeing less demand for the likes of natural gas. So this means that storage of natural gas in the US has built up. So we have this supply-demand imbalance. Demand has dropped off, supply remains the same. We've got effectively stockpiles of natural gas. And if we look at US production, the USA is producing something like $4 billion cubic feet, of gas a day more than is being used. Okay, so we are in a state of overproduction. It's a comparison, not a direct comparison, but an extreme one. You remember in when the coronavirus started, when it really hit global markets and the world population, we saw the price of crude oil plummet and go negative because of the problem of storing it. I'm not saying the same thing is going to happen here, but it shows how supply-demand imbalances can really extenuate and accelerate price movements in the markets. Plus, of course, going back to that interest rate thing, we have higher interest rates at the moment. The expectation is for further rate rises in the US, at least, and other major economies. So again, I think that's something that is going to affect investment in natural gas. Let's look at what some other analysts are saying. If we take a look at Goldman Sachs, so in the last week, Goldman Sachs have said that the next US gas bearish cycle is here. Although they do note that the sell-off appears overdone. You don't say. The price of natural gas has dropped 75% since last summer. So they're saying perhaps it's gone a bit too far in the short term. But they are saying this is the next US gas bearish cycle. So Goldman's are saying that gas prices could fall below $2 and still remain in a bear market. At the time of recording this, the price of gas is trading around $2.50. They also say if this bear market does persist, we may not see natural gas back above $4 till 2025. So let's put that in perspective. Just the beginning of this year, natural gas was trading above $4. So Goldman is saying if things get so bad, it might be a couple of years before natural gas gets back to where it was at the beginning of January. Let's see. Maybe more of that in a second. The other thing that's affecting it is sentiment. We see this in so many markets. You know, pick a market, and at some point over the last 10, 15 years, you can see extremes in sentiment. You know, this is a market that has been incredibly hard hit, and perhaps we have an element of a self-feeding sell-off. You know, people step in, try to buy the bottom, the market moves lower, they throw in the towel, there's more selling, the short sellers get encouraged because they're racking up profits on almost a daily basis because rallies don't last very long or haven't lasted very long in natural gas. So I think there is an element of self-fueling going on there. But there does, of course, come a point where perhaps this market is over pessimistic. You know, perhaps we could point to the Goldman research and saying, well, actually, if they're saying this is the start of a bearish cycle, it's already down 75%. Are we all getting too sucked in to the over pessimistic view for natural gas? I don't know. And from my point of view, clearly sentiment plays a big part because I'm a big fan in following trends. I did do a trade on natural gas, short on natural gas after the last video went out a couple of weeks ago. But as usual, we've talked about what's driven the price historically, what's driving the price now. Let's jump on the platform, take a look at the charts, and have a look at things in a bit more detail and see perhaps where it might go next, or where a potential major base may be for natural gas in the weeks ahead. Let's take a look. So let's take a look at natural gas, which I've seen some people in the live streams refer to as the Widowmaker, which is perhaps a little bit over dramatic, but it has been a relentless ride, really, a relentless slide since those August highs. So August highs around $10 US natural gas, and here we are now, $2.45. Even as I'm recording this, Saturday, Monday afternoon UK time, it's within a few cents of Friday's low, the lowest this decline had reached so far. So again, it's pretty weak today. So for me, that trend is absolutely down. We're going to have a look at the shorter term in a minute, but let's just take a step back or a step out from this chart and see some important levels for the past for natural gas. So I think this area is interesting to watch in the weeks ahead. I've flipped this to a weekly candle now. So each candle represents a week's worth of trading. So if we go back, April 2021, so not quite 2 years ago, the price of natural gas, we saw support around $2.43. If we go back to what was pretty major support right at the end of December 2020, so slightly more than 2 years ago, $2.26. So let's say that whole $2.20 to $2.40 area could be an interesting one. It has been the floor for natural gas for more than 2 years now. Are we going to see that hold? Or is natural gas going to go sailing through yet again a previous major low, and perhaps we start targeting a sub $2 price on natural gas? I think that is something that Goldman said could be a distinct possibility. Let's see how it pans out. But let's take a look from a trading point of view at the shorter term chart on natural gas. So absolutely, this trend from August is still down. For me at the moment, it would take a lot to change this trend, but let's have a look at the short term. So this is just this year on natural gas, and you can see how relentless this trend has been. So it ended last year, 2022, around $4.50, that sort of area, and here we are at $2.45. So it's dropped, what's that, about 40% so far this year, and we're only at the beginning of February. And it has been relentless. There are rallies along the way, but these run out of steam, the price gets smashed and slides lower. Let's put a trend line on it. So for me, this is where the trend line is sitting at the moment on the price of natural gas. So even if the market rallied to $2.90, $2.90, $3, let's call it that, the trend is still down. So as far as I'm concerned, I would still be a seller into strength on any short-term bounce for natural gas. When I put the video out a couple of weeks ago, I did actually go short natural gas. I'll show you the trade in a second. So I went short into this move here, back up to the trend line. It ended up being an okay trade in the end. I was only in it for a couple of days. Let me show you. So I got into the trade on the 24th of Jan, selling natural gas at $3.45, had a stop at $3.75, and assuming that trend was going to continue. I did this as part of that public trading of the account that you might have seen, where I was risking £100 per trade based on the approaches I go through in my trading course. So I did that with £100 risk. That was where my stop loss was set, selling short on the 24th of Jan. So I was only in the trade till the 26th of Jan. I've trailed the stop loss down and came out at 293. So obviously the price has moved lower since then, but it was a good trade. It made 1.75 times the risk, so £175 on that trade in the end, just jumping on the trend. And here's a quick summary of the performance of that account over the last 90 days. If you go to my website, jonesthemarkets.com/performance, you can see all the trades that made that up. I'll put a link in the description to this video. So that would be the trade I would look to do now. I'd appreciate the market has fallen an awful lot, but it keeps falling. I think if we did get a run back up to 280, 290, it's quite interesting to see what happens at these levels. And it's only if it really starts pushing through 3 would I really consider that perhaps this trend is changing. So overall, to go back to the dailies, still weak. It's a market that has had a relentless downtrend that I know quite a few people have been the wrong side of. A great lesson to how important it is to manage your risk when trading. But quite interesting to see what happens at these old 2-year plus lows around $2.20, $2.45. I'll do another update in a couple of weeks' time and we'll see how things are trading then. That's it for this. So taking a step back and having a calmer look at what drives the natural gas price. I hope you found it useful. I'll come back, do an update in a couple of weeks and we'll see where it's trading then. Don't forget, if you haven't signed up for the newsletter, go to the website, jonesandmarkets.com, scroll to the bottom of the page and you can sign up there. Get sent out every weekend free of charge, a trading tip, a hot market to watch and some other few bits and pieces in there as well. But for now, for natural gas, we'll leave things there. Thanks for watching. If you're not subscribed, click on subscribe to stay notified of more new content on the channel. But for now, good luck with your trading.